Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Hey everyone, welcome back to the fandom feed. Today we're talking about some unexpected market movers, Netflix. That's right. The rare media stock bucked the downturn and rose 1.7% on Monday as markets swoon amid Donald Trump's tariffs and a heated rant from the Fed chief. Let's dive in. So, you've probably seen the headlines by now. The S&P 500 is down 2.6%, the Nasdaq is off nearly 3%, and the Dow Jones Industrial Average is shedding over 1,000 points. But Netflix was one of the few bright spots, up about 1.7% to $989 after delivering well-received first-quarter earnings last Thursday. Media analyst Peter Supino from Wolfe Research came out in support of Netflix, as well as Spotify, calling them stable given their global subscription models that offer consumers vast quantities of content. And get this, Disney is already priced for a recession, according to Supino. Meanwhile, Spotify reversed course and is now down 2.2%. Disney, on the other hand, took a hit, falling 1.2%. Now we know why Netflix performed well. It's because of its strong content game. But what about the rest of the big board? Warner Bros. Discovery is down 3%, Comcast is off by 1.9%, and exhibitors fell along with broadcasters. Tech giants were hit hard too. Snap, Amazon, Apple, Meta, and Google parent Alphabet are all down around 3%. And it's not just one company that's struggling. Google was found guilty of violating antitrust law in digital ad tech. And then there's Tesla, which is having a rough day, down 7% as shareholders want Elon Musk back at the helm full-time. But what about those new tariffs? They've been buffeting markets for months, and it seems like they're not going away anytime soon. The threat of more U.S. tariffs and hefty retaliatory tariffs from other countries is really hanging over market sentiment. But Trump isn't backing down. He's attacking the Federal Reserve Chief, Jerome Powell, for not lowering interest rates to help avoid an economic slowdown. And today, he went full-on attack mode on Powell again, calling him a major loser. Powell has been measured in his remarks, but it seems like Trump just can't get enough of the Fed chief. Powell warned that lower interest rates will likely fuel inflation and slower growth. He said the Fed won't take any action on rates until the scope and impact of tariffs becomes clearer. And let's be real, that's a pretty bold move from Powell, especially given his dual mandate to balance inflation and unemployment. The Fed has traditionally had a lot of independence in setting monetary policy, but Trump seems determined to undermine that. So, what does it all mean? Well, one thing is for sure. Market players are getting increasingly anxious about Trump's behavior towards the Fed. And with Powell's term set to expire in May 2026, there's no telling when or if Trump might try to remove him. That's a wrap on today's episode of the Fandom Feed. If you want more news and analysis like this, be sure to subscribe to our channel and hit that notification bell. We'll catch you all in the next video.